Hello, Assalamu alaikum students. This is your teacher Azka and I teach business and accounting to the O levels and A level students. Okay, so as you can see from thumbnail that I'm going to start a series which is related to absorption costing and marginal costing. And we will try to solve the past papers from 2021 to 2023. And these questions will purely related to the absorption costing and the marginal costing. Okay, so we have this paper. It is basically, you can see that okay, so as we can see that this is your accounting paper 2 and the variant is 2 also, May June 2021, and this is purely related to the topic, which is absorption costing and marginal costing. And we can say that these two topics are very important. Um, okay, so let's just start our question. Okay, so in this question, you can see the Tea Limited manufactures goods at two factories. Okay, factory A and factory B. So we have information, but this is totally related to factory A because most of the time, whenever you will have question related absorption costing and marginal costing, so you will see that most of the time they have two factories. Okay, and in one factory they used to adopt the absorption costing, and in the second factory they used to adopt the marginal costing. But this question is for the 30-mark question, but whenever they will give you question related to the absorption and marginal costing, so this would be come as 30 marks or maybe 15 marks question. And of course, there are also other costing like inventory valuation, which we have some methods related to inventory valuation, FIFO and AVCO, which is average weighted costing method. But this time we are going to discuss about the absorption costing and marginal costing. Okay, so Tea Limited manufactures goods at two factories, factory A and factory B. Factory A has two production departments, okay, assembly and finishing. So these two production departments and two service departments, administration and canteen. Absorption costing is used at this factory. Budgeted overheads for Feb 2021 have already been apportioned, and the basis of the reapportioning the service department overhead is as follows. So as you can see that we have production departments and the service department, which is administration and canteen, and we have to reapportion the overheads of service departments for the canteen and for the administration also. So first of all, we have to reapportion the canteen's overhead into administration, finishing, and assembly on the basis of their percentage, as you can see. and after that, we will have to reapportion the administration overheads into finishing department and assembly department on the basis of their respective percentages. Okay, so let's start our question. Okay, so as you can see that overheads already, this is written here, 83,500, this and this and this. So first of all, we have to reapportion the overheads of canteen. So we have 15,400 overheads for canteen. So for administration, and the percentage is 10%. So 54,000 multiplied by 10% divided by 100. So we will have 1540 reapportioned overheads to the administration department. And after that, the finishing for the finishing department, canteen can like if we are going to reapportion this overheads into finishing department, so we will have to see the percentage which is given in the question. So this is 40%. So it means that we will again multiply this amount overheads multiplied by 40% divided by 100. So we will have this amount. And for assembly, it is 50. So we will multiply this overheads multiply by 50 divided by 100. So we will have 7,700 as reapportionment of canteen overheads to the assembly department. Okay, so after that, when we are going to reapportion, first of all, we have to get a subtotal of it, the overheads and this reapportionment, this reapportioned overheads. So after that, we will get subtotal of every department. Administration department, we have 29,840, and for finishing department, it is 7,6,260, and for assembly department, it is 9,1,200. And now we have to reapportion these overheads of administration department into finishing and assembly on the basis of their percentage given in the question. So as you can see, this is 25% for finishing department, and for the assembly department is 75%. So now what you have to do is you have to multiply 29,840 multiplied by this 25% divided by 100. So you will have this amount. And after that, again, you will multiply this amount. So these overheads multiply by 75%. So you will have this amount, which would be, you can say, the reapportioned overheads for the assembly department. Okay. So now we are going to calculate the total overheads. So what we have to do is for the assembly department, the previous, or you can say the apportion overheads was 83,500 plus this, plus this, plus this. So we have total overheads, and for finishing department plus. So we have total overheads for the finishing department, which is 83,720. Okay, so now we have some additional information in the next part. Okay, so we have additional information. So direct labor hours per month is in assembly department, it is 1,700. It means that laborers used to work 1,700 hours per month in the assembly department, and in the finishing department, they used to spend 1,400 hours per month. And machine hours per month for the assembly department is 2,800. And for the finishing department, it is 900. Okay, so after that, direct labor rate per hour. So what does it mean basically? It means that this $8.40 this factory A used to give $8.40 to the direct labor for per hour working. And for finishing department, it is changed. It is $8.20 per hour, dollar per hour. Okay. So if we want to see that whether assembly department is capital intensive or labor intensive, so how can we analyze it? We will see that, okay, machine hours is greater than the labor hours in assembly department. So we can say that assembly department is more capital intensive. And as you can see, the finishing department, here is the labor is the number of laborers who are working in this department is more than machine hours. So it means that this department is a labor intensive department. Okay, so now calculate the overhead absorption rate for each production department to 2 decimal places for the assembly department and for the finishing department. Okay, so now we are going to find the absorption rate. So we have overheads for the assembly department, which we just calculated in our previous question. As you can see, this is 1,13,580, and this is 83,720 for the assembly department. And we will use some bases for it. And as you can see that for assembly department, because this is capital intensive, so we will use 2800 as base, and for finishing department it is labor intensive, so we will use 1400 as base. So after that we will get our overhead absorption rate per machine hour, which is 40.56 for the assembly department and 59.80 per labor hour for the finishing department. Okay, so now there is some additional information again. So in additional information, as you can see, the company received an order from a customer. Okay, so the following details are available. So we have details about the cost. So as you can see that direct material is will cost us 1880. Direct labor for assembly department, they are working 11.5 hours to complete this order, and in finishing department, direct labor is working 6.1 hour to complete this order from which we like have gotten from the customer. And if we are talking about the machine hours, so in assembly department, machine is working for 5.7 hours to complete this order, and in finishing department, machinery is basically working or running for 2.5 hours to complete this order. So it means that we have some direct costs, and also we have some overheads. Okay. So first of all, let's talk about the direct materials and direct labor. So we have basically direct labors, and they are working in the assembly department for 11.5 hours. Okay. So first of all, we have to know that what is the wage rate, or you can say the payment rate, or you can say the per hour rate we are giving to the assembly department's labors and the finishing department's labors. And so we have just calculated this thing here. So you can see that there you can see that direct labor rate per hour is $8.40 for the assembly and $8.20 for the finishing department. And they are working in these departments for the 11.5 hours and 6.1 hour. Okay, so now will have to multiply it by their respective rate per hour. So 11.5 multiplied by 8.40. So we will have cost of direct labor in the assembly department would 96.60. And for the finishing department, it would give you 50.02. This will cost us 50.02 if the direct labor is working in the finishing department for 6.1 hours in order to complete that order which we have gotten from the customer. So now we have some overheads also, which is our machine hour, or we just calculated the machine hour rate here. This is 40.656 per machine hour and 59.80 per labor hour in the finishing department and in the assembly department. So these are basically our overheads. So this will cost us 231.19 and 264.78. Okay, so we have 2622.59 our total cost. So now, as you can see, that they're saying that company's policy is to achieve a profit of 40% on selling price. It means that whatever the profit is basically 40% of selling price, and prepare a statement to show the total selling price that T Limited will quote to the customer. So we have to work for this. As you can see that I just completed the rough working here. So basically there is a okay, so there you can see that we will use this statement here. This is a very normal and very popular statement. Total cost plus profit is equal to total selling price. This is our statement, and we will use this statement to extract our selling price and also our profit. So we know that our total cost is 2622.59, and our profit, we don't know the exact amount of profit, but we know that whatever the selling price is, 40% of the selling price would be our profit. So it means that we can write it here as in this manner, that 0.4 multiplied selling price is equal to total selling price. We can write it selling price here. Okay. So now we are going to move this selling price from this side to this side. So it means that this 0.40 will minus here 1 minus 0.40, and this would give us 0.60. And now we are going to again move the selling price from this side to this side, and 2622.59 will be divided on 0.60. So we will have selling price of 4370.98. Okay, so this is basically our selling price. So now we are going to find the profit for it. So whenever we want to find the profit, so what we have to do is just subtract total selling price from the total cost. So after that, we will have our profit figure, which is 1748.39. So this is very simple. So some students may think that, okay, if we have 40% of profit, so it means that we can convert this margin into markup, and then we will apply markup on the cost, and when we can find the GP, and then we can find the sales. But just remember one thing, that you will find the sales, but you will not find the selling price. So this is totally the wrong way to calculate the selling price or profit in the absorption costing. So this is the right way to find the profit figure or the selling price if you are doing the absorption costing question. Okay, so we have done with this part also. So as you can see that there are some basically statement wale question. So you can see, state two possible causes of under absorption of overhead. So you can just read from my solved example. And next they are asking about the allocation of overhead, that they just want you to define these terms basically, and you should remember, or you should try to, you can say that, clear the concepts about these definitions, and you should remember these definitions, because these definitions are so popular in the CIEs, and you cannot ignore the analysis point, advantages and disadvantages of absorption costing, or like any other thing which is related to the theoretical knowledge. So theoretical knowledge is also very important. As you can see that this is the you can see that this is the part of your paper, and this is also so much important. Okay, so now we have some other additional information. So this is factory B, and T Limited manufacture a single product in factory B, and marginal costing is used at this factory. Okay, so in this factory, we are going to calculate maybe profit or something else, but using the marginal costing. Okay, so the following information is available for December 2020, when production was 9,000 units, which included 1,000 units produced using overtime. It means that 8,000 units, maybe they are just producing normally, but for making another 1,000 units, they have to you can say that they have to say to their workers, and they have to maybe give some extra wages to their workers to work overtime in the factory B. So we have direct material, which is 72,000, and direct labor is 74,000, and other variable cost is this, fixed cost is this, and there is our total cost. Okay. So direct labor overtime is paid 1.25 times to the normal rate, and all production was sold for $30 per unit. And the directors have been considering changing the supplier of materials, and the following information is available. So like when we are going to solve the advice wala question, so we will have to rely on this knowledge, on this knowledge basically. So an overseas supplier is prepared to become the company's sole supplier of material at $5.50 per unit, including the delivery cost. A supplier can only provide sufficient materials for the company to make 7,600 units per month, and the directors do not expect any other cost to the or the unit selling price to change. All production will be sold. Okay. So here you can see in F part, they are asking that calculate the maximum profit per month that can be made if materials were obtained from the overseas supplier and production limited to 7,600 units. So what would be the revenue for this? So we know that 7,600 units would be our production limit, and the selling price for these production unit would be $30, as you can see. So we will have to multiply $7,600 multiplied by 30. So we will have this amount here. Okay, so after that we have direct material, which is for the 5.50, as you can see, is the cost of the direct material is $5.50. So we have to multiply this by the 7,600, which is the production limit of the units. And direct labor, which is 7,600 multiplied by, you can see that for the direct labor, you have to do some working, because we don't know that what would be the total direct labor cost, or you can say the per labor cost would be for the 7,600 units. So for this, you have just see this working. Okay, so we know that in this statement you can see the following information. The following information is available for December 2020, when production was 9,000 units, which included 1,000 units produced using overtime. And direct labor overtime is paid at 1.25 times for the normal rate. So it means that only 8,000 unit is producing on the normal rate, but if 1,000 units more than producing 8,000, so it would cost you 1.25 times greater than the normal rate. So what we have to do is 8,000 unit multiply by direct labor. We don't know that what is the cost for the direct labor, so that is why we are multiplying by this, and plus for 1,000, we know that it is the rate which is 1.25 times on the normal rate is equal to 74,000. 74,000 basically the total direct labors. Okay, so now what we have to do is we just extract this direct labor here. 8,000 plus 1,000 multiplied by 1.25 is equal to 74,000, which is direct labor. And now direct labor, we just move this statement from the right side to the left side, so it would give us the division form. Direct labor is equal to 74,000 divided by 8,000 plus 1,000 multiplied by 1.25. So we will have the direct labor, which is $8.0. So as you can see here, this is 8.00. Okay. So after that, we have variable cost, which is 7,600 multiplied by 2.50. This is our variable cost. So we know that our variable cost is 22,500. And the total number of units is 7,600. It was 9,000 units. So we have the variable cost divided by the number of units. So after that, variable cost per unit would give you $2.5. So now you have to multiply 7,600 multiplied by 2.50. So we will have 19,000 as variable cost. So after that, you will have to calculate the contribution. And after that, you will have to subtract the fixed cost from it. And this would be our profit for the month. And this is our last part. And I just wrote different points here so you can see, but I didn't put any advice at the end. So you can put any advice at the end of on the basis of the non-financial factors and for the financial factors. So you can use this information, and you can also use this information also. Okay, so I hope that you have seen this example here. So now I'm going to signing off, and let's meet in the other class. Goodbye.